Hello traders and welcome to another video review. Today is Friday, July 15th, 2022. Let's find out what's going on the financial markets. The very important event of today are only two, and all of them are scheduled for release during the New York session. Core retail sales and retail sales are scheduled for release at 2:30, and the market participants expect the core retail sales to increase from 0.5% to 0.6%, and the retail sales to increase from minus 0.3% to 0.8%. Very important data for the American economy, and if they will be even beaten by the actual reading, then of course the US dollar will have another reason to rally even higher. Why I'm talking about it? Because if we take a look at the US dollar index, we will see the very strong uptrend. So let's take a look. The US dollar index is flying high. It doesn't want to even concern about any sort of the technical indicators and the technical things here on this daily time frame chart. As you can see, I have put some pin bars here during the last let's say kind of a pullback maybe, but all of these pin bars are now invalidated because we got a breakout higher, and even we got a breakout higher here. So at least 3 pin bars in a row had been invalidated. So there is nothing right now on the US dollar index daily time frame chart that shows us a potential end or termination of the uptrend and some kind of a pullback maybe, or some kind of a correction. The recent high was made at 109.26. Let me just put it on the screen. So around there we got the recent high, and it will act as a local technical resistance. Yesterday's high always behaves like this. So if we break above 109.26 and close the body candle above this level, then of course we will continue the uptrend, despite the fact that market conditions are extremely overbought. And as you can see here, we still have this bearish divergence between price and the momentum indicator. This is even a multi-bearish divergence. So right now 75 points on the RSI means that this is very strong momentum. This is a very strong trend, and it's all related to the other financial markets. Because we have only important data from the US, let's find out what is going on the SP500, because as we know, the money flow goes like this: US dollar up, then gold down, and then S&P down. So we have the basically very straightforward money flow on the financial markets. Let's see if that correlation still exists. As you can see, this is the S&P 500, very basic chart. We don't need much lines here to see that since the high at the level of 4,795, we've been in the down move, and this down move is very interesting, because as you can see, it's significant, right? You can easily see that this correction is something actually, and it's bigger than the COVID panic. That's a bad tick, so that doesn't matter, and it's bigger than any correction during this uptrend. So this is a completely different cycle. Now, because of the many people here, many traders, many speculators thinks that this market will go down, and as you can see, I got my arrow as well that's pointing the level of 3,634, and that's still correct. We have to admit that this market is poised to the downside as long as the level of 4,180 and the lower level 4,114 is not clearly violated. So this is our level, right? This is our level or zone. Let me just put some maybe a rectangle here. This is our zone that tells us that if we trade below this zone, the outlook remains bearish. Let me just change this background to there you go. Yes, this is the zone. Okay, so as long as we trade below the zone, the outlook remains bearish. Recently, we retraced like 50% of the recent wave down. Then we are inside of the this is of course kind of a pullback zone or something like this, consolidation zone, congestion zone, whatever you call it. Everything points out to the fact that breakout below 3,737 is the breakout. This lower is the breakout to the downside, right? So this is the local technical support, this is the local technical resistance. Breakout below 3,737 opens the road towards 3,634, which is the low of the beginning of the June 2022. Now, if we break below this level 3,634, where is the next target? The next target is a thick green line, which is the high of 2020. All right, 3,340. Sorry, 3,400. Let's say 3,400 is the target level. How much did we retrace already on S&P 500? Let me just find out for you. Let's say from here to here, we already retraced like 38%. It might be a little bit more. There you go, 38% is here. So I guess we are going towards 50% of the retracement. So for this move up might be retraced 50% sooner or later. 38 is now gone, so let me just remove 38. It doesn't matter anymore, it's been tested. So this is very nice zone for the bulls. Please keep an eye on this, between 3,500, 3,400 and 3,193, around this level. So if you will be looking at this zone to basically see how the prices will behave, please keep an eye on the market, on the downtrend termination clues, downtrend termination patterns like bullish engulfings, like hammers or something like this, pin bars and something like this. So very nice zone. But S&P 500 going down, dollar is going up. What is then doing the euro dollar? Basically, euro dollar below the parity, and this is very concerning because right now 1 euro is even less worth than $1. 9,953 is the recent level that we've done. Basically, this is the level from the yesterday. As you can see, I got my short channel here, but the market doesn't even want to break above the lower channel line. It keeps being, there you go, it keeps being like bouncing from this lower channel line. So right now, of course, the downtrend is still intact. We are getting away. We try to get away from the parity level 1 to 1. 1 euro is $1. Already 9,953 is the low. However, it looks like we want to go much more lower than this level of parity, and we want to get away from the level as soon as possible, right? So the euro dollar is going lower. Euro is being sold. Dollar is being bought all over the board. So then the last pair is, of course, US dollar to Japanese yen, and as you can see, this market is as well in a big uptrend, and the uptrend continues despite the fact that we have again multi-month bearish divergence on a daily time frame chart. If we take a look here, you can easily see that we just recently made another very nice breakout higher, another higher swing high, even this is the swing high. 137.08 will be technical support for the market, and the recent high was 139.40. all right, and now we will move our key technical support even higher. 131.50 is the key technical support. So as long as market trades above this level, the outlook mid-term, short-term, long-term remains bullish, remains to the upside. All right, so again, by the end of the week and just before the data from the US is published, US dollar is the king. US dollar is being bought across the board. Every currency pair related to the US dollar is being bought. Okay, so please be aware of this fact, and it doesn't look like that the market wants to stop doing this or terminate this uptrend on the US dollar. It looks like over the weekend we will still be inside of this. We'll be continuing basically this uptrend, and the US dollar should strengthen even more in the Monday morning, when we of course will perform another technical analysis. That's everything for me for today, for Friday and for the weekend. I hope I see you guys on Monday. So take care and bye bye.